Good evening, everybody. This is Johnny Seville from Acorn Wealth. This is your executive summary for stocks up for Wednesday. Let's have a look. The S&P 500. Now, this market is getting very interesting. We've had a monster rally. Our open range was set on Wednesday, March 1st. We had a big up day, then nothing the next day. We basically evaporated all those gains. We tested the open range the following day. We dropped below, stayed back in it, and then crunch. Monday this week, we broke below and we've continued downward today. Now, again, if we look at the weekly chart on the S&P 500, we can see how that might play into this idea I've been talking about of a head and shoulders building on top of this upward channel breakout, because an upward channel should break down. When it doesn't, we get suspicious. It broke up, and we may be seeing a head here. Now, because of the length of this channel, I would normally expect the head to be a little bit wider, which means I'm not completely ruling out the fact that the S&P could go higher, but certainly we are seeing very, very bearish signs, or very bearish warning signs, at least across the market. High yield bonds, which is should go up if smart money likes the risk in the market, have been going straight down. You can see this is high yield bonds here. I've got a lot of trend lines drawn on here, so don't mind that for the moment. Just have a look at, you can see this upward channel building, and that looks like that's now breaking down. It's definitely breaking down. It's broken through support. It's broken through this trend line, and the plummet and the candles are expanding in range, and they are increasing in volume. So we went from 10 million to 9 million to 15 million. Then as we broke through, 17.07 million, then 17.02 million. So the volume's increasing, the candles are expanding in range, and this would suggest a target here on the high yield bonds down around this area of 85.70, which is where it may find some temporary support, but certainly says that smart money isn't buying into corporate high yield bonds, doesn't like the risk on trade. So that's an interesting thing to look at there. Now, if we also look at the amount of stocks in the S&P 500 that are actually above their 50-day moving average, you can see that has declined just in the last, well, what are we at here? The high was 64, February 23rd, let's go back to, yeah, so basically February 23rd and all the area around it, 65% of stocks in the S&P were above their 50-day moving average. That has now dropped 20% to 50% of stocks above their 50-day moving average. So the if you look at the 50-day moving average as a key support level, only half the market is actually above one of their key support levels. So that certainly doesn't suggest that that the market is entirely healthy either. So all of these things are an interesting key warning signal. I also like to have a look at the Dow Jones Global Index. This has also been a great smart money indicator. You can see this one's been rolling over and looks like it may be about to break down. You can see this kind of channel that developed here. An upward channel on the Dow Jones Global appears to just be about to break. One touch, two touch, three touch. Now this is the fourth touch. Now if anyone who's studied Acorn's materials knows, the rule of three in an oscillating pattern, which an upward channel is, means that after three touches on that support line, it's due to break down, which once again gives us the ability to measure, and that suggests that a breakdown from 344 down to the 50-day moving average here. So it all matches up. So this is what it looks like. It looks like we're going to have a short-term pullback for March, or at least until options expiration Friday, where we get another retest. So that's the look across the market. Now, having a look at a couple of the shorts that may be interesting to play here, I've got a few for you. CBOE is one of my favorites here. You can see great money flow divergence, really pushing down. We're now below zero without much of a move in price. You can see on the daily chart we've come out of an upward channel as well. And then you can see if we go to a longer term chart, we've got a beautiful long-term upward channel, which appears therefore to be filling out a head and shoulder pattern here, which suggests a drop down to around $68. So this may be an interesting short here, with a target of maybe even lower than that, because it just depends on when it hits this. But let's look at even say the support here. Where was the big volume break? Big volume break happened there. So we're basically looking at say 66.63 as a target. So I'd look at an entry here, where we're currently trading at. I'd look at a stop criteria above the high of this candle, which is at 80.63. So from basically $78 to 80.63, we've got $2.63 of risk. We've got a little bit above that, so let's say 80.77. So that's roughly $2.80 of risk for 78 down to 66. We're dealing with $12 of potential reward, roughly. So, I mean, that's pretty good risk-reward ratio. We've also got some fairly decent insider selling here, as you can see, just in the recent times over the last few days. We have had a substantial amount of selling coming out of CBOE. So I think this one's quite interesting for a potential short, and those would be the stock criteria that I would look at. And in terms of a possible options play, I'll be looking at the June $80 puts, which are currently $4.09. Okay, now BMS is my next one. As you'll see, these guys also have a little bit of insider selling here, a big chunk relative to how much has happened before. As you can see, the senior vice president just got rid of close to $1 million in the last few days as well. Now, that doesn't necessarily mean anything on its own, but the packaging and containers sector or industry has also been something that's had a fair bit of insider selling over the last, as an industry, over the last few months as well. What I like about the beam is short is that, as you can see, it's coming out of an upward channel. Just make that a little bit bigger. As you can see, we're coming out of an upward channel. And what appears to previously be almost like a head and shoulder here. If you can see that, let's just sharpen that up a bit. Yeah, it's not exact, as you can see, but interesting nevertheless that it's making these kind of bearish noises. Left shoulder, head, never got up to the right shoulder, broke down. So that head and shoulder would suggest oops, there we go. We'd be looking for a breakdown towards this area around 44, and as you can see, based on the upward channel, we're looking at better than that. Basically the same. Same target. So the head and shoulder target, which is from there, and then below the breakout zone, gives us the same target as the upward channel breakdown. So we're looking at a target here of 44.57. So that would be the first stop, but that could go much further. So again, I'd be looking at that as a possible short, with a break below today's candle of so break below 48.17. And a first target here, again as we said, of 44.57, so I look at 44.67. If you're looking for a put play, I'd be looking at the April puts, April $50 puts, which are currently $2. Okay, now let's shift back from and my two favorites now to keep on your watch list. HPP, Hudson Pacific Properties. This is looking really good. Lots of insider selling on this one. A ton of insider selling on this one. This one is just forming its upward channel. Keep an eye on this one. This could be the next one to go. That's one of my favorites. And VCIT. This is also looking really good on the weekly chart. Long-term upward channel. As you can see, that's starting to near its support zone, so those are two to keep an eye on. Now, of course, keep an eye on them best by being part of our gold service and executive summary updates. You can give it a try for $9 for a month. Why not give it one? Go to acornwealthcorp.com/gold, and we'll be seeing you in the next executive summary. Take care.